There's a coffee shop 2 blocks from here that's been open for 9 months. They're busy every morning, lines out the door, 5-star reviews. The owner works 16-hour days and still can't figure out why there's never any money left at the end of the month. This isn't a story about failure. It's about something worse. The business is working, the customers are real, the revenue exists, but somewhere between the cash register and the bank account, the math stops making sense. And the owner, like 70% of small business owners in their first 2 years, has no idea what's actually killing them. Let's talk about the silent problems, the ones nobody warns you about. Problem 1. You don't know your numbers, and your numbers don't care. Most business owners can tell you their revenue. Ask them about their gross margin, and you get a blank stare. Ask about customer acquisition cost versus lifetime value, and the conversation ends. Here's what that ignorance costs. A landscaping company brings in $400,000 a year. Sounds healthy. But materials eat 30%, labor takes another 40%, equipment maintenance, insurance, and vehicle costs grab 25%. Before the owner pays themselves, there's 5% left, $20,000 for a year of work managing a crew and dealing with clients who think rain delays are negotiable. They're not running a business, they're running a job with extra steps and worse hours. The problem isn't the revenue, it's that revenue is a vanity metric. What matters is margin, and most owners don't track it until it's too late. They make decisions based on feelings. Business feels good this month. That's not data, that's hope with a checking account. Problem 2. Cash flow is a silent killer, and it moves faster than you think. You land a big contract. Celebrate, right? Not yet. That contract requires you to buy materials up front, hire additional staff, rent equipment, maybe lease more space. You spend $30,000 in month 1 to fulfill a $60,000 order that doesn't pay out until month 3. Meanwhile, your regular expenses don't pause. Rent, payroll, utilities, they're due regardless, so you float the gap with a credit card or a business line of credit. You tell yourself it's temporary, but then another opportunity comes, and another. Each one requires upfront capital. You're growing, technically, revenue is climbing, but you're also hemorrhaging cash to fund that growth, and the gap between what you spend and what you collect keeps widening. This is how profitable companies go bankrupt. They succeed themselves to death. 60% of small businesses that fail don't fail because of bad products or lack of customers. They fail because they run out of cash while waiting to get paid for work they've already done. The term for this is overtrading. The irony is vicious. You die because you're too successful to survive. Problem 4. You think you're the business, and that's the problem. Most businesses aren't businesses. They're jobs that the owner can't quit. If you stop working, revenue stops. If you take a week off, things fall apart. Clients call you directly. Employees wait for your approval on everything. The business doesn't run without you. It is you. This sounds like dedication. It's actually a design flaw. A real business is a system that generates value independent of any single person. What most owners build is a machine that only works when they're inside it, pulling levers. The moment they step away, it stalls. And here's the math that makes it worse. If your business can't operate without you, it has no sellable value. You can't exit. You can't scale. You're locked in. You've built a prison that pays you just enough to keep showing up. The tragedy is that most owners don't realize this until they burn out or get sick or hit 55 and wonder why they can't retire like everyone else. Their business has equity on paper, but no buyer would touch it because without the owner, there's nothing left to buy. Problem 5. You're optimizing for survival, not strategy. When you're in firefighting mode every day, you don't have time to think about what the business should look like in 3 years. You're just trying to make payroll this month. This is where small businesses stay small. Big companies dedicate entire teams to strategic planning. They run scenario analyses. They stress test their models. They ask hard questions about where the market is going and whether their current approach will still work in 18 months. Small business owners? They're answering emails at 11 p.m. and hoping the printer doesn't break again. The gap isn't resources, it's mindset. Most owners are so deep inside the day-to-day that they never step back to ask whether they're building the right thing. They're too busy making sure the thing they already built doesn't collapse. And that's how you end up running the same business the same way for 10 years while the world changes around you. Let's pull back for a second. None of this is about incompetence. It's about how business actually works versus how people think it works. Everyone sees the front stage, the busy shop, the growing client list, the optimistic Instagram posts. Nobody sees the backstage, the sleepless nights over a late invoice, the quiet panic when a key client leaves, the spreadsheet that doesn't add up no matter how many times you check it. The silent problems don't announce themselves. They accumulate, slowly, quietly, until one day you look up and realize the business you thought you were building isn't the one you actually have. And here's the question nobody wants to answer. How many business owners right now are working harder than they've ever worked, making less than they used to make, and calling it entrepreneurship? The coffee shop I mentioned at the start, still open, still busy. The owner still doesn't know if they'll make it to year 2. But the line's out the door, so it must be fine, right?